Welcome to Business Unleashed, a Plano Chamber podcast presented by Baylor Scott and White Plano. Today we're talking all things wealth management and smart investing for business owners with two incredible guests from the Kravitz Group at UBS. Harry LaRosiliere, Senior Vice President, and Armani Miller Jackson, Account Vice President of Wealth Management. As an entrepreneur, you're focused on growing your business, but are you building and protecting your personal wealth too? In this episode, we dive into financial challenges business owners face, how to strike the right balance between reinvestment and diversification, and what key market trends to watch in 2025. This episode is jam-packed with practical tips and expert insights to help make you confident with your financial decisions. Let's get into it. We have a very special topic that we're talking about that's going to be so helpful for entrepreneurs, small businesses, mid-sized businesses. Even if you don't have a business, it's going to be a very important topic that we want to share with you. So we're going to talk about building and preserving wealth. And so we want to give you all time to, introduce yourselves to us, to our audience who may not be familiar with the Kravitz Group at UBS, who may not be familiar with Mary here, what you've been doing, behind the scenes. So let us know. Introduce yourselves and tell us all about what you're up to.
Thank you, LaChaya, for the introduction, and it's a pleasure to be on. We hope that your audience finds this informative. I'm a senior partner at the Kravitz Group. We're a wealth management team within UBS. And for those who may not be familiar with UBS, we are the largest global wealth management firm in the world. We manage over $5 trillion of client assets. And where many banks have a multitude of services they offer, whether it be commercial lending, credit cards, retail banking. Our bread and butter is wealth management, and that is what really the value add we bring to the table. Our team, the Kravitz Group, is a wealth management within UBS of a group of 12 of us now, right? 12 of us, and we give a real boutique feel to the working with the firm. So our number one advantage to the families and companies we serve is shrinking down this large global institution in a very small and a very tangible and accessible and personalized way to deliver solutions that are tailored specifically for them.
Awesome. And Armani, how did you get started in wealth management and working with UBS Kravitz Group?
Yeah, so I studied finance way back when, and my first job actually was at UBS in New York City, or technically Weehawken, New Jersey, one of our national hubs for the Wealth Advice Center, which is a division within UBS. So I got licensed, got the opportunity to engage with clients. Really resonated with me, the work that I was doing, helping families achieve their financial goals, and I committed to it long term. Harry and I met in 2017 or early 2018, so coming up on 8 years, 8 years now. And the opportunity presented itself 2 years ago to relocate from the Northeast and join the Kravitz Group. So I told him if he could convince my wife that this is the right step for our family, we'll consider it. And here we are.
Made it happen.
That's some good convincing. That's some really good convincing. And we're so glad you're here and, made the transition. I'm not originally from Texas either. So, it's like when you get here and you love it, it's worth the move. It's definitely worth the move.
Look, here it was easy. All I was doing was selling Plano. And, I've had a history of being able to do that. So it wasn't that hard. I told them there was a fantastic former mayor that ran the city. That's what.
Like, hey, if that doesn't get you there, I don't know what will. Also, so Mary Harry, you, like I said, you've championed for Plano, and like I said, I think this will be a good, introduction to a lot of people who only know you in that right. Like like back, I know you, have been doing this a long time. What interests you in finance? What pulled you to finance, in the beginning when you first were starting out your career?
So I started in 1994 when I first moved to Plano as a financial advisor, and I was looking for my profession to offer me a number of things. First and foremost was to be in a profession that was purpose-driven, where I could help people. So being an advisor, it's been really fulfilling looking back over the past 31 years or so of the value I brought to families' lives by giving them peace of mind. So that was number one. Number two, I wanted to be in a professional environment with flexibility of hours and flexibility of my time. And that was important to me because I had aspirations of community service and being able to be out and about and serve on nonprofits, city council, and then ultimately as mayor. And so being in this business or this profession allowed me to do that.
That's really good. That's really good. So let's kind of switch gears and kind of talk about, our topic with preserving wealth as an entrepreneur, because, entrepreneurs, a lot of entrepreneurs start out strong. They start out, bootstrapping and doing a lot of things on their own and, don't really have a good path, way forward to be able to build a sustainable business and to, create wealth for their families, So what are some of the biggest like financial challenges entrepreneurs face when they're trying to build long-term, wealth, and how can they overcome some of those things?
So the challenge is just what you said. They're starting a business and they're in charge of everything because as an entrepreneur, you wear multiple hats and you're responsible from start to finish at everything that happens. And in addition to the challenge of doing that and selling your widgets and getting your name out and joining chamber meetings and networking, you also have to take care of your personal finances as well. And so the combination of the two, I think, is really what makes a real challenge. And so we often talk to entrepreneurs about getting that balance and remembering there's two sides of this. There's the growth of your business, and then you have to separate that with the growth of your personal wealth.
And build that. One of the really key things to think about as you're growing your business is really establishing a solid financial foundation personally. And that looks like oftentimes you're investing a lot of assets into your business, which is fine, but you should always have an emergency fund of 6 to 12 months of personal expenses, just for emergencies happen as it relates to your health, your family, unexpected policy changes that might impact you or potentially disrupt your business. So having that emergency fund really allows you to operate your business at optimal levels without having major disruption.
I would also say too, it's really about building a team around you, a professional team, and that might sound self-serving, and in a certain sense, it is because I think we do add value to the equation. But not only wealth advisors, but a tax advisor, valuation specialist, and estate planning. There's a number of different professionals that important for an entrepreneur have that will create a network for them from the advice that they give, but the other professionals that those networks can connect them to. So it's really building that ecosystem for success.
And I think too, like when you, like when, especially when people are starting out, it's like, okay, once you start out, you may start out doing everything yourself, but at what point do you move over and you say, okay, I need professionals to handle this part of the business for me? I need, I can no longer do my own website. I need to hire someone. I can no longer do my own, financials. I need to hire someone and moving from, just getting started to, being able to have a team around you that actually knows what you're doing. Because like I said, when you're a business owner of one, a lot of times, you can't make those decisions, for yourself.
And really, it's a shift of a mindset of looking at it not so much as an expense, but an investment. Like you said,
Mhm.
if you're a business owner spending hours on the website because you don't want to pay for it, those hours that you could have spent either on your business or with your family, which is all valuable time. And so that's really what you're trying to do by having a team of professionals around you.
Exactly. Yep. So
And
true.
as you grow the business, you want to really have clear distinctions between your personal and your business assets. When you're a one man shop, it's a very times gray area. But as you scale the business and the business is starting to really grow and generate revenue, it's really important to distinguish the two to protect your personal assets from any business liabilities you might incur.
So, how should business owners balance like reinvesting their profits into the company versus like diversifying in outside investments?
So we're big proponents on diversification and balancing that reinvestment. So we like the 50-30-20 rule. 50% of your inflows get or profits get reinvested back into the business for business growth. 30% of the profits you should be putting that away towards diversified investments on your personal side, really not so much connected to the day-to-day operations or growth of the business. And then 20% really into cash reserves. Certainly until you build up that emergency fund where you have comfortably 6 to 12 months of expenses set aside for any.
And from the way Armani explained that, you can see that it's really a fluid type of situation where you build up that reserve now, and that 20% now you maybe put it more towards the business or some towards your personal savings. And it speaks to just having a long-term plan. Diversifying assets into passive income streams, for example, is something I hear people say all the time. I want to have a passive income stream. And the very first thing they think about is real estate, which is the opportunity to have that. But even simple things like investing in equities and the stock market over time, what's more passive than having an investment that's growing, let's say at a 7% rate without you having to do anything? So unlike a real estate, you don't have carrying costs and renters and things like maintenance to deal with. You put that away, but most importantly, be long term with it and let that grow, because the rule of 72 tells you that if you're getting 7% on an investment, for example, it'll double in 10 years. Every 10 years it doubles. And so that's great passive income. And it's not the traditional way you think about it, but that is a good way to diversify as well.
And that's why I'm glad we're kind of having this conversation, because those are things that people need to be reminded of more often, because that's exactly true. Like, okay, well, I'm gonna flip a house now. I'm gonna do this. And it's like, it's something different that you can be doing that could, you use some better results and, a little less
And
work.
it's not an either or, it could be both.
Yeah. hmm Very good. So, what are some like tax efficient strategies that entrepreneurs can use to grow and kind of preserve their wealth too?
We are a big proponent of utilizing the tax code to your advantage. No one likes paying taxes. We know that it feels onerous at times, but there are opportunities, especially for business owners, to take advantage of the tax code. So, for example, if you're a small shop, a one person business or a 2 or 3 person business, there's retirement plans called SET plans, and not to be use the acronym, but it means Simplified Employee Pension Plan. And simply, all it is a retirement plan for small businesses. That's the best way to think about it. Or there's what's called a solo 401k, where you can have a 401k for yourself. There's defined benefit plans, which allows for those with really good cash flow and consistent cash flow to save a bit more than the typical plan would offer. All those type of investment opportunities or saving opportunities provide tax advantages, tax deductions, which we all know will be, if you're in the 25 to 30% tax bracket, that's 30 cents on the dollar that you're saving and not giving it away to Uncle Sam. Then once you've built the wealth, and as you're building the wealth, the next consideration is the wealth preservation and the wealth transfer. And so that gets back to, again, dealing with the high level professional to provide you proper business entity setups as a business attorney, and maybe estate planning for the transfer of wealth for the next generation, or for the generation of your company, even in terms of those that you've built that are still there in case something happens to you, that there's some continuity for the business.
Very good. Very good. So now we're like, eggs are $12. Things are really expensive. There's a lot of uncertainty, in different markets and different things like that. How can, some small business owners like structure their investments to kind of protect against like the market downturns, and some of the economic uncertainty that's happening around us?
Yeah. So to my previous point about being proponents on diversification, where you never know if you could be able to predict the next market correction, right? Everyone would make those adjustments
So
accordingly.
true.
So that's why, with the information that we have, we adopt a defensive asset allocation approach, really maintaining a balance of equities, fixed income, and alternative investments in order to hedge against any volatility that you might see. There's oftentimes a rule of a 60-40 portfolio, where you have 60% of your assets allocated to high upside equities, 40% of your assets a bit more concerned in fixed income instruments and other assets that are less correlated to
like cash and
like cash, bonds, etc. At UBS, we use the three L's, is what we call them, as we think about liquidity, which stands for liquidity, longevity, and legacy. The way that you invest in the short term is going to be very different from the way that you invest for long-term assets that you aren't going to be leveraging in the near future. Making sure that your short-term assets are easily accessible, stable, generating some sort of attractive yield. And on the longer side of the spectrum for some of your more long-term goals, I'm looking at ways to achieve competitive returns that have a bit more upside.
And so like those three L's that Armani mentioned, liquidity means what you're going to need in the short term and within the next 3 years. You're going to manage that in a particular way, very conservative. Longevity is going to be those assets that are 3 to 5, 10 years plus in terms of time frame. So you're going to invest that in something a bit more growth orientated, but also want to have the ability to access that possibly to replenish your liquidity. And then lastly, your legacy is to benefit those that are going to be there after you're gone. And that can be a completely different allocation, probably even more aggressive because you have a longer term. And so all those three strategies have their own allocation, and then that will ultimately comprise of what that person's overall allocation. And it's different for everyone, which is really one of the important takeaways here. There's no one size fit all. It's really a customized plan that you should deploy for yourself.
Yeah. Armani, you had mentioned like earlier that as a business owner, you should have some separation between like your personal goals and like, I mean, not your personal goals, but your personal finances, your business finances. But how could like business owners, how could you like align your personal financial goals with like your company's growth trajectory?
Yeah, absolutely. So they're really one of the same, right? They go hand in hand with one another. When you're thinking about protecting your family and your personal assets, as we mentioned earlier, working with a team, you really just want to title things the right way so that your personal assets are able to grow, whether it's in a trust to protect your personal assets or whether it's in an LLC to protect your business or your personal assets from any business liability, right? So titling is a key consideration.
And that's often a very simple fix. I think we often think about these that they're so complex, and there is some complexity to it, but there's some very simple action points you can take. So to Armani's point, setting up a limited liability corporation for your business will protect your personal assets from any business risk. You go into business with all good intentions, but things happen, and whether it's unsuccessful or liability or some kind of dispute with a client or someone you work with, that can put risk on your personal assets if you don't have that title. So simple things like that will actually make a huge difference.
Yeah. To your long-term success.
So many entrepreneurs are in different spaces in their business. Like some are just getting started, new, some are like have been at it for a while, but then some are in a totally different place where they're saying, what does it look like for me to, leave my business? So what is a role that succession planning can take place for some of these business owners who are looking into, what does the future look like for my business and for me?
I appreciate that question because I say succession planning starts the day you start your business. Everyone begins their endeavor with the expectation and desire that this is going to generate income, generate wealth, and there's going to be some type of liquidity event at some point in time. So having that plan in place from day one is important. It seems like virtually every business owner we meet, about 3 to 5 years, are going to sell the business. It's pretty consistent. And what happens is that it's usually not until the year before they're ready to sell the business or some kind of triggering event, whether it be health or change in the business environment, that creates their catalyst. And it's not always a good catalyst. And so, but if you have your succession plan in place, it does really mitigate dealing with those different variables. A lot of times business owners say, yeah, my children will take over the business. Well, statistics tell us only 30%, 1 out of every 3 child will take over the family business. And the 1 out of 3 that takes it over doesn't necessarily mean they have the acumen or the desire and the skills that the matriarch or patriarch had. And so that succession plan from day one is important. Simple things like buy-sell agreements, where maybe you have 2 partners or 2 or 3 key principles that will allow liquidity in case one passes away. So you have the case where Armani and I are in business, and I manage a critical component of the business, and Armani does the other. I pass away. He has to now find somebody to replace me. I know I'm irreplaceable, but you're going to try. But there's a cost and there's a risk to the business. And so a buy-sell agreement would allow the opportunity for the business to have some kind of funds upon my passing to support the new hire and transition over time. And then probably the most important is identifying key leadership within your organization. So as your business is growing, start identifying the talent, the next generation of your leaders, so that maybe when you're making that liquidity and selling that business, you're not going outside to somewhere else. You're doing it internally, because the hard part sometimes is creating that business and having that baby and turning it over to a complete stranger. There's an emotional cord that you have to cut to do that. And so that mitigates that. So succession planning from day one is important.
That's really good.
And to add to that, a lot of business owners think that my business is valued off of, look how profitable I am, look at the sales and the revenue that my firm is generating. But when a proper business evaluation is done, they're looking at the management team, they're looking at the succession plan in place, because quite frankly, if you have a good management team in place, if you have key leaders that will be able to take over the business when you're no longer there, that inherently makes the business more valuable and allows you to sell your business at a higher multiple and ultimately lead to an even higher purchase price or sale price for the business owner.
That's really good and helpful. And I hope that, hope you all are listening and watching and taking notes, because that's really good. So what advice do you have to some small business owners or business owners, period, they say, I'm ready to take a more proactive approach to their financial future?
Yeah, so really setting clearly defined personal wealth goals. Oftentimes we find business owners have 80% of their net worth illiquid and tied to their business. So as you're thinking long term, what does life look like for me after the business? I'm really crafting a financial plan to understand sort of your lifestyle, spending needs, the type of goals that you're going to have financially after the business. Sort of reverse engineering backwards to say, this is more or less what I will need. This is what I have liquid today. In order to accomplish this in a sustainable fashion, I need to sell my business or my portion of the business for X dollar amount so that I can continue my lifestyle in the way that I like, support my family, and any philanthropic goals that I might have. So we refer to that as the wealth gap, and really making sure that your business is, again, maximizing its valuation so that it's more realistic in filling that wealth gap post liquidity.
And so when Armani speaks about that financial plan or wealth plan, it's really the blueprint of being intentional. It's saying, by year X, I want to have a certain amount to live this certain way. And that plan is, for us, when we're working with families and entrepreneurs, it's a living document. It's not it's not a pretty report with 100 pages and nice graphs that you just look at one time and put away. Every time we meet with our clients, our families, to update their current situation, we track that against the plan. And the reality is you're planning for 5, 10, 15, 20 years out. There's so many variables that you can't account for that you have to update it based on the twists and turns that life brings us. And so that truly is a living document. And I think that's important to note, because so often I'll say, when did you have a financial plan? Yeah, I did it 4 years ago. And well, how are you doing? Versus, I don't know, I haven't looked at it. And well, then it's not relevant anymore. It's like you have to use it as the blueprint for your success.
That's good, because I think what you said too, it's like a lot of, especially now, we live in like a generation where everybody wants everything fast. have this in mind. Oh, I'm going to create this business and, I'm going to be able to sell it for 50 million in 2 years, but no planning takes place of how you're going to get to that position. And so I think this is, really a really good conversation. Very, very good. So let's kind of switch gears and talk about some trends that you're seeing. So like, what are some market trends and investment opportunities in 2025 that, we should be paying attention to right now?
Yeah, so when you think about just how the market has done a lot, there's a lot of talk about the Magnificent Seven, and a lot of that is driven by AI. So by all means, you can invest in the market, but as you're even thinking about investing in your business, really looking at ways to leverage AI to make your employees and your business run in a more efficient, optimal manner is going to, again, enhance value for your business and allow you to scale and take things to the next level. So
Yeah, I think for when we talk about artificial intelligence, I think it's easy to be myopic and say, I do this, and how does artificial intelligence and AI help me do this thing? But the reality is that artificial intelligence can help you do so many other things that isn't specific to your business, but adjacent or relative to you running your business. And so it could be your HR department, it could be your billing, it could be your accounting, it could be your sales, lead generation and tracking, it could be customer service. Those are true investments above and beyond the stock market. I think that from a market trend, if you're not figuring out how artificial intelligence help you in your business, regardless of whether you're a one-person shop or 5,000 employees, it is a missed opportunity. On the investment side, though, I think the way we approach for investors is, what's going to happen in the next 12 months will have some bearing on your portfolio in the next 3 to 5 years. We're not trying to figure out the next 6 months or the next year. We're trying to figure the next 3 to 5 years. And so paying attention to the geopolitical events, what's happening with our economy as it relates to inflation, interest rate, tariffs, all matter, but they create what I call tactical opportunities. We're never one of those to say you shift everything from one place to the other, but you move around the margin, and that's how you add incremental value to your portfolio.
That's good. That's good. And so you kind of got me started with our next question. UBS works with different, and we've been having a really good conversation about small businesses. And we know, like say, you work with families, small business, mid-sized business, large corporations. So give us like a glimpse of like some of the services you offer for, different groups and, how UBS can be a great resource, for all businesses alike.
yeah, absolutely. So as we think about the different services that different business owners, entrepreneurs are going to need, when we get into the large size businesses, I'm looking at corporate planning services for some of the executives. Oftentimes, a lot of your compensation is through your company's stock plan. So looking at ways to tax efficiently leverage that portion of your portfolio to achieve your financial goals is something that we advise on. Cash management needs for the business, whether that looks like
From small to large.
Yeah.
Small business versus a large business, we have the capabilities of helping companies manage their cash management so that they're effective with remember we talked about the 3 L's, that liquidity portion. Common mistake is too much cash. They want to be careful. They say, you never know if there's a down cycle in the business. I want to be able to make payroll. And, you find that some folks will have large cash balances for a prolonged period of time. So finding ways to get that money a bit more productive is a cash management. When Armani mentioned the corporate planning services, we show that people spend a lot of time during the day worrying about their personal finances. And if you can provide your company a benefit where your key employees, your key executives, your key contributors can have a financial plan to relieve the pressure or the stress of their personal finances, it opens them up to be more creative and relaxed to do the job that you hire them for. So we offer that. And then so from small to large, we have a host of services that we work with to make sure that we meet the businesses where they are at the point that they are and deliver the services that will help them get to that next level. And so from a UBS standpoint, we're value-add firms. We work with people that are looking for professional advice. If you're a do-it-yourselfer and you feel that you can go online and do your own estate plan and get your own asset allocation through some kind of customize some model that the computer spits out, you're probably not the person that's going to work with us. The person that works with us is someone who wants to kind of have what I call a personal CFO, where they're running their business, they're dealing with their family, they're doing things that life brings them, but they have a trusted advisor in us that will take care of the other things that support their lifestyle and their business. And then for us, it's not only about us, it's our network. It's our network of other professionals that we will connect them with. So like you talked about the web services, for example, sometimes we know people that are in that space. And so that will be a value add that has nothing to do with investment management, but it has everything to do with adding value to the business owner or a valuation specialist. You think your business is worth this much and you're truly committed to selling it in the next few years, but maybe you think what your expectation of what you're going to get versus what the market is offering is different. And you got to be able to know that to reconcile that wealth gap that Armani spoke on.
Well, this has been an amazing conversation. I want to thank you all for being here and sharing all of this wealth of opportunity and every tip. And I hope people were taking notes and ready to jot them down because I've learned so much. So if I want to make a next step and I want to say, okay, I want to, reach out to you, how do I do that? How can we take the next step with UBS?
Absolutely, LaChaya. Thank you for having us. It was a pleasure on our end as well. The best way to get in contact with us is either through LinkedIn or leveraging our website, the Kravitz Group on UBS. All of our contact information is there. You can give us a call, email, LinkedIn. But the goal is really to continue pouring into the business community here locally in Plano, the greater Plano community. So we appreciate the opportunity to be here.
And I'll say this, for any of your listeners, if you have a financial question, if you have a juncture where you need advice and guidance, not everybody is the right fit for us, and we realize that, but you're welcome to reach out to us. I've been an advisor for over 31 years. I know a lot of people within the industry. So very often we get calls from entrepreneurs and families that are looking for advice that just isn't a fit for what we do and how we operate our business. But we often can find them somebody, whether it's within UBS or outside of UBS, that might be a more appropriate connection. So again, I believe the value in life sometimes is leveraging your network and connections. And as a longtime chamber member, I know how important that is to leverage your network. And so as a fellow chamber member, I'm here to help we're here to help in any way.
Most definitely. And I'll drop the links in our show notes for our listeners if they want to. I'll drop the link to your website and to the LinkedIn if they want to, so they could connect in a better way. Awesome. Well, thank you all so much. Oh, no, thank you for being here.
That wraps up another exciting episode of Business Unleashed, a Plano Chamber podcast presented by Baylor Scott & White Plano. A huge thank you to Mayor Harry and Armani Miller-Jackson from the Kravitz Group at UBS for sharing their wisdom on building, managing, and protecting wealth as a business owner. If you're ready to take control of your financial future, we encourage you to connect with the Kravitz Group at UBS to explore some tailored strategies to help you get to your goals. Catch this episode and all of our past episodes on Spotify, Apple Podcasts, or your favorite listening platform. Until next time, stay informed, stay strategic, and keep unleashing your business potential.